Good morning all, hope you're doing well. So basically we're still risk on at the big picture. Nothing that isn't going to change for a good while. They're very caught off guard on their short positions. They're very bearish and they've added to that bias, which is bonkers really, because there's 16, nearly 17 retail traders trying to short indices versus the one person buying. So there's 17 people trying to, the 17 bears versus the one bull. So it's getting a bit crazy. So if we get to minus 20, that for me would be the limit. We don't really see it go beyond that. I think we might see it go to 21 or 22, but that's in about 3 years of doing this every single day. So we're getting quite close to those extremes. We can go beyond 20, but we're getting very close now. Technicals improved. They actually did quite well. A little bit mixed on the overall picture. Indices rose, the US ones, but however the France 40 and the UK 100 negative. The Japanese market also negative as well. Dollar was flat. We had some commentary from a Fed official yesterday saying if the inflation keeps coming down, then we can start to look at looking at the interest rate. So they sort of putting a little seed into the hive mind about interest rate cut. So that's the first comment I've seen about a Fed official talking about a rate cut. So that obviously really hampered the dollar. We also had a bond auction as well, and there wasn't many bids for the 7-year yield on the US Treasuries. So the poor old USD had a bit of fundamental headwind yesterday, and don't forget this thing up here as well. We're very much risk on. There's not really much need for safe havens. You could argue like dollar is pretty a favourite safe haven. The yen is just doing its own thing currently because the monetary policy is a little bit out of bonk, but you could probably argue the dollar should be weakening because of this, to be fair. QDB scores, we can reset them now, and we can see at the top is EU, NU, NJ. Greens, that's fine. Bottom, Euro, Kiwi, CAD Swiss, Dollar Swiss, reds, so that's fine. Perhaps the pound Swiss could do better, and you could probably argue EA could do worse because it's got a poor score, but yeah, we're positive on the day, so that can probably come down. And they'd sold the Kiwi quite a bit there, so that's that. I'll talk about the robot, and we've got a 25 pip SL and a 25 pip TP. Now, kind of a bit frustrating is that we didn't quite get to our TP. We got 25 pip take profit. Right, so that's very annoying. But it is what it is. It might get to TP. It'd be nice if it did. And in case you're wondering why this triggered, it's because and while the herd has sold, now what we're doing, we're trying to target the stop loss cluster. That's the reason for the selling. Okay, so it's a little bit contrarian in so much as that we're doing the same as the herd initially, but we're coming down to take the stop loss cluster, and that's the 2.4 logic. Okay, it's actually 2.3 logic, but 2.4 is 2.3 but with risk management, much better risk management. So what we're doing, we're forecasting a reversal of the liquidity. Okay, that's the logic. Okay, in case you're wondering why that's fallen, right? And now what will happen if in a couple of hours, because these are triggered every 2 hours, we're probably going to get the buy, and that's what it's going to do. It's going to give it a bit of time, absorb liquidity, and then we're going to get the buy, which will then mirror this. Okay, so that's a little bit of a clever logic there. All right, so in case you're wondering why we're doing the same as the herd, is that we're targeting liquidity, and then the next signal will be the buy after the stop loss cluster. Okay, so we've got to take note of the trend on gold, so you don't really want to be fighting it. However, we've got the crossover at the doji. Alright, so we can map a box on that doji, so keep an eye on these indecision candles at the crossovers, okay? And that's telling us that the big fish are undecided about price action, and this tells us what the retail guys are doing. So it's the combination of the big fish and the dumb money. Okay, so we're making a risky sell because we're clearly a buy at the big picture, and we're clearly ascending as well on the trend. So you've got to be very careful about this one. But we've created a supply for the fact that they've gone long, and the big fish were undecided. Perhaps they didn't quite know what they were going to do with gold. And so 2041, 2049, we can call that. So we've got some supply because they've gone long. Okay, S&P. Yeah, they're selling that, but slightly sideways. We are very skewed. We could come down a little bit more, 22%. We could probably squeeze them a little bit more, but we are very extreme. We can get to like 20%, and it gets a bit bonkers. So we probably might have got 2% more of a squeeze, on the sentiment. Be careful. Clearly, we're ascending. So if you're selling that, you're going to be super careful. And I probably would recommend just wait for this to start showing signs of weakness first before you start to sell. You don't really want to be picking the tops on this. It's just wait for time to develop, and then you can get a better entry, because it's clearly really strong, isn't it? They're going long. We had that big fall. Yeah, it's nearly 200-point fall there in 2 hours, just from the fact they've gone long. If they continue to go long, we'll see some more declines, but it'll be by the dip opportunity, like I've been saying for months. If it does fall, we're just looking for dips. Okay, so don't become a bear. You need to be quite flexible. DAX is bonkers. It's actually ludicrous, and they're selling it, which is crazy. So 12% now. And it looks like a Wall Street bet Redditor effect. There's some kind of ape mentality going on here, and yeah, we'll have to wait and see. This is going to be definitely popcorn material. I'm going to be watching this today to see what happens, but they're going to sell it. We're going to pump, and we're going to have to crush them. That's what's going to happen. So yeah, we're going to probably be at historical skew this week. If they continue to sell, we won't be that. I've never seen an index this skewed before in my life, so we'll have to keep an eye on that. It's just treacherous conditions. Yeah, so if it falls, they're probably likely gonna sell it. They want to get involved. They're under so much pressure, under so much drawdown. If it falls, they'll probably try and they're trying to get to break even, and their break even's probably down here. Maybe up here, it's hard to say. So just be careful. Remember, we've got the Middle East peace talks, we've got the Ukraine-Russia thing. It's kind of subsiding a little bit, and you've got the Fed cut that was mentioned yesterday by a Fed official. That's quite bullish, and also the sentiment is very skewed to the upside as well. So be careful, and I'll speak to you guys soon. So let me know if you need any help. I've not got any trades open because I'm looking to buy the dip, and I've clearly missed my opportunity on the index, on all the indices here. So I'm going to wait for the next opportunity, which might arise next week or the following week. But you've got to remain patient. You've got to stick to the plan. Just so you know, the plan for me is buy-in, pending that this remains green, but this has to be red. That's my plan. That's the QDB approach. You've got to wait for the technicals to really drop, and then you're looking for a nice low entry, pending that this remains green, and ideally this is green as well. But the technicals aren't falling because of the sentiment, right? So that's the plan of attack, and I'll speak to you guys soon. So trade safely.